Good day, you're welcome to Crab Meets Tutors once again. My name is Stanley Omechi. So quickly, let's move to the business of today. We're on taxation, ACCA Financial Act 2017, and I'm on question 156, which is Mike. Always love dividing the bird. So we go. First of all, we read the requirement before we read the question. It gives us direction, and we can develop a strategy on how to go. That's how you should go when you're in your exam. So you can plan your answer in your head if it's quite short. Plan your answer in your head. So let's go. Requirement. Assuming that no reliefs are available, calculate the chargeable gain arising from each of Mike's assets disposals during the tax year 2017/18. Note, you are not required to calculate the taxable gains or the amount of tax payable. Calculate the chargeable gains, not the taxable gains. So that's A. It has two notes. I'm sure we'll have to dissect it. On 19 May 2017, Mike sold a freehold warehouse for $522,000. I told you once in here, that's a chargeable gain. Sold. I love going to proceeds. It's my favorite language on this topics. So that's 522. Okay. And the warehouse was purchased on 6th of August 2003 for $258. Voila. Less cost. Seems we might have some other things. 258. Let's keep reading to see what we get. And was extended at a cost of $99,000 during April 2005. Is that an allowable cost? It was extended. No, it is not an allowable cost. It's a capital expenditure. Remember, if it was something that got damaged and you're replacing it, then it's an allowable cost. It's a revenue expenditure. In this case, it is not an allowable cost. So it goes in there. This is the enhancements, expenses, 99,000. In January 2009, the floor of the warehouse was damaged by flooding and had to be replaced at a cost of 63,000. Clearly, this is an allowable cost, but you have to show your examiner you know it's an allowable cost. You don't skip it, put it in there, and put 0. There's a mark for that. The warehouse was sold because it was surplus and business requirement as a result of my purchasing a newly built warehouse in 2016. Both warehouses have always been used for business purposes in the wholesale business run by Mike as a sole trader. Okay, I think we have this sorted out. This is the chargeable gain for note 1. Get this down and I will. Let's see what you get before I write it down. So let's go 2. This is 1, note 1. And let's go to 2. Okay. On 24th of September 2017, Mike sold £700,001 ordinary shares in Rolling Limited, an unquoted trading company, for £3,675,000. These are shares. So quickly, I love numbers. This is a format I would recommend. Numbers and numbers and costs. Clearly, for this. So there was okay. He sold. Now I'm going to put this like this. I told you whenever you hear sold, let your ear tick. Proceeds. He sold for 3,675. So less cost. And that's what we're trying to get in here. That's the cost we're trying to get there. And I will, from this working, I'll call the working data. Okay, he had already purchased 500,000 shares. So let's say purchase 500,000 shares in Wally Limited on 2nd of June. So let's say 2nd June 2007. He purchased 500,000 at what? For 960. Voila. On 1st of December 2012, Wally Limited made a 3-for-2 bonus issue. Bonus issue. 1st December 2012. So he made 3-for-2 bonus issue. I'll just put it here. 3-for-2 bonus issue. 3-for-2 bonus issue. When you hear that, 3-for-2 bonus issue. 3-for-2 bonus issue. So take it clearly and put 500,000 times 3-for-2 bonus issue. You get that? And that should be 750,000. That should be 750,000 shares. Since it's a bonus issue, there is no cost attached to it here. Take all this down, 250,000, and we have 960,000. Now, remember he said he sold the share, he sold 700,000. Now we can now do 700,000, I use K, over 250K times 960,000. That gives us the cost. Down here, less 700,000. And use our calculator. That should be 700 divided by 250 times 960,000. 537,600. This detail is enough for me because this is 537,600. You can finish it up to get the balance carried forward. Let's do them down here to get the balance carried forward. But this is actually what we really need down here. And then we have chargeable gain. Chargeable gain. We do this and 3,137,400. That's a chargeable gain. For those of you, I hope this was your answer. That's it. And we go to B. It says, state which capital gains tax relief might be available to Mike in respect of each of his disposals during the tax year 2017/18, and what further information you would require in order to establish if the reliefs are actually available, and to establish any restrictions as regards the amount of the relief. Okay, let's go from note 1. We can see clearly in note 1 it's on the freehold warehouse building. So one of the reliefs that's available is the rollover relief. And of course, you know, for the rollover relief, you have to know when it was bought. From this question, when the new replacement was bought. From this question, Mike sold the freehold warehouse on 19th of May 2017. Now, one of the requirements for you to claim the rollover relief is that whatever acquisition that you are getting to replace what you're selling, it has to be gotten 1 year before and 3 years after. So if this was sold 19th of May 2017, it has to be bought on or after 19th of May 2016. If it was bought before then, it doesn't qualify for rollover relief. You understand that? Then clearly for what other thing? Now the cost of the replacement, you should know that about rollover relief. The cost of replacement, that's why I'm still here. The cost of the replacement, since it was sold for 522,000, for you to get full relief, full rollover relief, you have to invest the full thing. If not, the uninvested balance would be taxed. Capital gains will be taxed. Now, in terms of the shareholding, that's for the shares, that's entrepreneurs relief may be available, and for entrepreneurs relief to be available, like I said in the last video, you have to have at least 5% of the shares, and voting rights also there. That should be that, and you might have to know the details of the share capital required, so you can know whether it's 5% or not. If it's below 5%, no, it's not available for entrepreneurs relief. For shares, it has to be 5%. Voting rights inclusive of that. So those are things you can quickly read up on that. Thank you for watching this video. Still Crab Mess Tutors, Stanley Amechi.